Hello everyone and welcome to the Investing Angles channel. In our weekly update, we will discuss first of all TLT and different aspects of it, like candlestick perspectives and Elliott waves. Then we'll discuss 10-year yield from various angles. Then we'll go on and check the other yields on 2, 5, 10, 20 and 30 years, how are they doing and whether they are aligned or not. Then we'll touch a bit on the spread between 10 and 2-year yields. We'll say something about Canadian 5-year yield, and we will end up with TLT discussion. Alright, so let's move on and see what is happening right now. After flipping the annual trend bullish on the first day of 2025, the US 10-year yield has continued to advance steadily. And today, January 10th, it has possibly done a very strong bullish event, an epic one, probably once in a lifetime one. And I am talking about this one because today the candle, the green candle, annual candle, this is the annual chart, crossed the 10-year moving average, which is a purple line here. As you can see, it is sitting right now 3 basis points above the line, and the chances for moving higher are fairly significant. To be correct, the yield already tried this twice. In 2023, it moved a little bit higher and then it was rejected into a doji, and in 2024 it just touched the line. So it is surpassed, so this is the third attack, and well, there are chances that it's gonna be a successful one. Just a few days ago, in January 1st, we said to our readers that long-term technical indicators and candlestick patterns continue to support a sustained bullish trajectory, pointing to rate hikes potentially extending into 2025 and beyond. It remains to be seen how and when the Fed adjusts its narrative to align with these unfolding dynamics. And today we received a message from Bank of America that Fed is not likely to move the rates down. And it's, well, the message at least points that it's going to be frozen for now. But, well, we know that after a pause, it might be shifting gears and deciding to move in the other direction. So we are patiently watching who will be the next bearer of the message. All right, so that's the 100-year chart, and this is what we see right now. So let's move on, see what else is happening. This is our big chart that we charted back in December 2022. So this chart is over 2 years old right now, and it is unchanged. So so far we are the same elements on the chart, nothing changed. We just keep it rolling. We think that yield completed the impulsive wave of the bottom in 2020 for the very wave 1. Then it was a short wave 2, which lasted, by the way, over a year. And now there is a possibility that wave 3 would be unfolding. And we know what it means. Right, so that's the big perspective. Let's move on and see what candles are telling us at this moment. Just to remind that yield completed the year with very strong bullish candles, and we discussed them quite a lot in our annual video, which is available publicly. Just have a look at the January 1st videos, or in our report, which has much deeper analytics and lots of charts beside what was discussed in the video. For that, you would need to go to our website, investingangles.com, and check there. By the way, we are offering a free reader subscription which allows you to check our publicly available articles and charts. So what is happening now? The day of Friday completed with a strong bullish candle. The same happened on the weekly frame, and this is the 10-day frame, which is closing on Wednesday, next Wednesday. So far, we are seeing that yield advanced over 32% of the bottom in September, which we called, by the way, very precisely. And right now we are seeing no reversal pattern at all, so the chances for continued rally are fairly high. And let's say if the yield pauses for next couple of days or advances just a little bit, it can form a nice 3 white soldiers on the 10-day frame, which would be fairly significant, and there are a lot of bullish probabilities with it. All right, so that's the candle perspective on the short frame. Let's move on and see what else is happening here. So these are 2, 5, 10, 20, and 30-year yields, and we want to congratulate the 20-year yield with the first one to reach 5% mark. Everyone else is behind, and it looks like the 30-year will be the next one, so it's the closest. So we are seeing that on Friday every yield completed with a strong bullish candles, and the chances for moving higher are fairly significant. What if we have a look at the weekly frame? Weekly is also displaying a big bullish continuation candles. So far everything looks bullish. What is concerning though, and I would like to emphasize this one. So this is the 10-day frame, 10-year frame, and this is the 2-year yield. You see the difference. So while 10-year yield advanced only 153% approximately from the previous day closure, so the 2-year advanced the whole 2.8, almost 3%, and this is huge difference. So basically it kind of brings a question about the spread between 10 and 2 years, and this is the chart. This is the chart for the spread, and what we are seeing here is a strong bearish candle, which can, by the way, start a decline, a very significant decline. We looked at some technical indicators and they have a very strong support for a decline here. It means that the 2-year yield will be moving faster. Well, that's an interesting point, and we decided to look into the perspective Elliott wave here. I don't know whether anybody did this before, but nevertheless, so what we are seeing that from the bottom, which happened in June 2023, the first wave appears to be corrective. No matter how we slice it, it's a corrective wave, especially the middle part, which is supposed to be wave 3, but it is not. So we marked it as wave A. Then we have an obvious wave B, and then potentially wave C. So what some might think that this is kind of an impulse, but unfortunately this is not an impulse because of this one. This wave is clearly corrective. So it has so many overlaps, and there is no clear wave 3 that we think that this is the corrective structure. And if we have a corrective structure here, then the chances for an ending diagonal for wave C are fairly high, and this could be the end of the ending diagonal here. And this is what we are seeing here. This is the perspective chart, this is the perspective formation. If we have an A, B, C, and by the way, wave C here is almost identical. I measured it. Put the Fibonacci level. Here you see it's just a few basis point smaller than the wave A, the length of the wave A. And if this hypothesis materializes, and this is indeed a diagonal, then we should see something like this. This would be a move below zero. Zero line is here. Well, let's see how this hypothesis works. We'll be monitoring it closely, but it's nevertheless it's a very interesting perspective right now, so that the spread will turn negative again in a couple of weeks or maybe months. Alright, so let's move on to the next chart. What we have here is the Canadian yield, 5-year yield. So we've been tracking this for a while, and as a Canadian, this is a big interest for me and for everyone I know. So that's our chart on June 5th, and we said that the rates will go down, and after that it will form some sort of a flag or a zigzag, and then the rates will go higher. And that was a good opportunity for Canadians to lock their mortgages for as long as they could. Well, that's the initial chart, and this is the same chart with the same graphics. So we see that the rates hit the bottom in September, October. Then they tried to move higher, and but Bank of Canada sliced the rates a couple of times, and we couldn't see a strong rally, but it looks like this is going to be recovering. These are the monthly candles, and the formation here is bullish. So the December closure was just an indecisive doji, and if January makes this green candle here and the big one, so the rally would resume, and these would be our targets. So just to make them clear, this would be an ideal target for this move, but we cannot reject at this point a bigger target. But again, this if the bonds if the yield follow the channel, we would see this rates probably in 3, 5, or even more years. So the move will be fairly slow. That's our expectation. All right, so that's all for Canadians, and now let's move on to TLT. So TLT for closed today with a green candle. However, we are fairly skeptical about the reversal power of this formation. So far, it doesn't look very bullish. And what is happening here? I put these circles here around the important crosses. This is 50 over 200, 50 over 100, and the potential 100 over 200 days moving averages. So if this cross happens in the next couple of days or in the next 2 weeks, well, the bearish odds will elevate strongly. Speaking about slightly bigger formation, this is 3-day frame. It closed with a strong bearish candle, and the weekly is also showing a bearish continuation candle. We don't see any reversal sign. To be completely honest, so some hourly frames have been oversold for a while, and we might see a minor bounce in the next couple of days just for normalization of the frames. But the chances that they will continue down are fairly high. And let's move on, have a look at the next chart. So this is the chart this is probably our one of the most important ones. This is the midterm frame, and what we are seeing here. We've been tracking it since June 15, when we said that it's going to be a flag of some sort because of the structure was corrective, and after that we were expecting TLT to resume its write down, and this was June structure, and then in September we called the bottom, we called the top, we called the top, said that the reversal structure, the reversal candles are fairly strong, and the chance of moving down is fairly high. And since then we didn't change anything technically on the chart, just adding more details down the road. Since then, since the middle of September, TLT lost over 16%, and so far it is falling strongly, and already formed eight red candles in a row on the 3-day chart. Well, that's our target is 8150 potential for the entire structure, but if we look at this particular wave, so we should expect it somewhere between 80 and 77. That would be the most typical move here. All right, so that's technically all. That's all I wanted to say today. Thank you very much for watching, and spread the word around. And if you are interested in our analytics, check our website investingangles.com, where we offer plenty of different analysis for commodities, for indices, for the stocks and treasuries, currencies, and many more. Thank you very much, and happy trading, everyone.